Hello, and welcome to the Consumer Proposal module. No one starts his or her life including to file a consumer proposal. People file a consumer proposal for reasons beyond their control. A consumer proposal is not a bad thing. It is the debtor's legal right to file a consumer proposal. A consumer proposal should be considered as one of the methods to become debt-free. Let us run through the objectives of this module. I would like to begin by defining what is a consumer proposal and answer the who, what, and why of filing a consumer proposal. I would also like to examine if a consumer proposal may be the debtor's best option. We will also discuss the characteristics of a consumer proposal, the advantages, the disadvantages, the cost, the ways to re-establish the debtor's credit, and answer a few of the most frequently asked questions. Bankruptcy can be avoided. No one should jump into it before exploring other options that could relieve him or her from their current debt crisis. Let's look at a situation. The debtor's income is being split among all its creditors in the form of a minimum payment. Not enough money to honor the debtor's commitment. The debtor is struggling to make ends meet and wondering what to do. If this is the situation you find yourself in month in and month out, you need to explore if consumer proposal is right for you. What is consumer proposal? It is an arrangement to pay a reasonable amount to the creditors. This allows the debtor to keep all of his property and stay out of bankruptcy. Consumer proposal requires the debtor to come up with a plan to pay the debts within 5 years. What is the difference between a debt management plan and a consumer proposal? A debt management plan is not a legally binding agreement between the debtors and his or her creditors. A consumer proposal is. There are 2 consumer proposal types under the Bankruptcy and Insolvency Act. Consumer proposal. This option is good for a maximum of $275,000. Division 1 proposal. This option is best for any amount in excess of $275,000. In either case, the debtors must have the capacity to pay the amount agreed upon in the legally binding consumer proposal for the entire duration of the consumer proposal. Here are some of the advantages of a consumer proposal. Consumer proposal allows to the debtors to pay the settled amount over a maximum period of 5 years interest-free. The consumer proposal must be accepted by a majority vote from the creditors. A 50% plus 1 votes received from the creditors is deemed to be in acceptance, and the consumer proposal is legally binding from there on. The interest that the debtor has been paying on their debts is frozen at the date that the consumer proposal is filed. The debtors can negotiate to repay only a portion of the debt he or she owes. The creditors are restricted from taking any legal action against the debtors. Wage garnishments and court orders from creditors, except for support and alimony, are immediately stopped. There are 2 professionals that can help the debtor file a consumer proposal: the certified insolvency counselor and a bankruptcy trustee. A certified insolvency counselor can help the debtor put their assets in order and help negotiate the terms of the consumer proposal with the trustee. The trustee can help you file a proposal to your creditors. The proposal offers the debtor a way to pay off only a portion of their debts, extend the time the debtor has to pay off the debt, or provide some combination of both. For the proposal to be accepted, the creditors must be better off under a consumer proposal than if the debtor goes bankrupt. In other words, let's say the debtor's situation has 2 options: filing for bankruptcy or consumer proposal. Bankruptcy would cost the debtors under the surplus income guideline $500 per month for 9 months, for a total of $4,500. But should the debtor file for consumer proposal, he or she will need to offer more money than what the debtor has offered under bankruptcy. For example, $6,000 over 36 months for the proposal to be accepted. The role of the certified insolvency counselor is to help the client understand the bankruptcy law and how it works. The counselor conducts the initial assessment of the debtor's financial situation, compile the debtor's statement of affairs, and negotiate with the trustee the terms of the consumer proposal, helps the debtors re-establish their credit after discharge, helps them buy cars or a house after the proposal. Individuals or business owners who are under siege from creditors filed for consumer proposal. A consumer proposal is a legally binding debt solution in dealing with creditors. It could be a business owner whose company has failed, leaving him or her personally responsible for the business debts. A person that has lost his or her job and was forced to live off credit before a new job was found, or a person that was unable to work due to sickness, or a person depends on payday loans for monthly expenses. Generally, it will be someone who has something to gain by filing for a consumer proposal rather than a bankruptcy. For example, a professional who can't maintain their accreditation if they go bankrupt. We are going to discuss how the consumer proposal works. The first stage in the consumer proposal consists of determining the details of the proposal. A certified insolvency counselor or bankruptcy trustee will conduct the financial assessment of the debtors, help the debtor summarize their financial situation, determine how much of a monthly payment the debtor can afford to make, and then they will compare that payment to the total amount of the debtor's unsecured debt to determine how many months the debtor will require to pay. If the number appears to be reasonable for both the debtor and the creditors, they will prepare the documents necessary to file a proposal to the creditors. The second stage in the consumer proposal process is up to creditors under the Bankruptcy and Insolvency Act. The creditors have 45 days to vote for or against the proposal, if 50% plus one creditors. In other words, a simple majority vote for the proposal, then it seems to be acceptable by all the creditors. 15 days after that, if there are no objections, the proposal will be approved by the court. From that date forward, both the debtor and the creditors are locked into the terms of the consumer proposal. The consumer proposal becomes a binding agreement for all the involved parties. The debtor is expected to honor the new binding contract with their creditors. 3 missed payments will revive the debts, and all creditors will have the legal right to go after the debtor for what he or she owes, plus interest. Should a default happen, the debtor must contact his advisor to discuss options. During the second stage of consumer proposal, any dissent to the consumer proposal received prior to the 45 days of the filing is deemed to be a request for a creditor's meeting. During the meeting, the creditors vote with a simple majority of the dollars voted, deciding on acceptance or refusal of the proposal. If the creditors do not accept or the court does not approve the consumer proposal, the debtor cannot make another consumer proposal. The debtor is not automatically bankrupt if the consumer proposal is not accepted, but it imposes certain conditions while the person is in the consumer proposal period. While in consumer proposal, the debtor must make his or her monthly payments to the trustee. If the debtor misses 3 monthly payments, the proposal is deemed to have failed. If the debtor proposal is annulled, the debtor's unsecured credits may immediately apply to court to garnish the debtor's wages, and interest charges are applied to the debtor's debts back to the day the debtor filed the consumer proposal to the creditor. The debtor does not need to turn in all credit cards. However, the creditor most likely will cancel all the credit cards and freeze any lines of credit. The debtor must attend to counseling sessions on money management. Should the proposal receive 25% or more of the creditor vote against accepting the proposal, the trustee will call a meeting of creditors. The debtor must attend the creditor meeting. At that meeting, the trustee will help the debtor negotiate with the creditor in an attempt to find an agreement that both the debtor and the creditor find acceptable. Consumer proposal to creditors were created to deal with unsecured debt. An unsecured debt is money owed without collateral. Examples include credit card, lines of credit, personal loans, income taxes, or payday loans. The debtor's creditor's rating will definitely be affected by filing a consumer proposal. A consumer proposal will only work if the debtor has the ability to make the proposed monthly payments. The consumer proposal must offer the unsecured creditors more money than they would receive in a bankruptcy, and they have to believe that the debtor is capable of making the payments that he or she is proposing. Remember that a consumer proposal is an alternative to bankruptcy. Under the Bankruptcy and Insolvency Act, a debtor in consumer proposal is entitled to keep all his assets and can earn as much money as possible. However, remember, the more assets that debtor has, the more money the debtor has to offer his creditors. The cost of the proposal varies from a debtor to debtor. The most assets the debtor has, the more money they have to offer the creditors. The trustee fees are set by the Superintendent of Bankruptcy and are described in the Bankruptcy and Insolvency Act. In most cases, the trustee will be paid out of the proceeds of the proposal. For example, a debtor offers his creditors $12,600 in payments over 36 months to retire $25,000. The debtor has to pay $350 a month. The fees for the proposal would come out of that amount. Can't I just leave a creditor out of the consumer proposal? No. If the debtor files a proposal to creditors, he or she is required to include all of their unsecured creditors. All of the debtor's unsecured creditors must be treated the same. It's one of the basic conditions of the filing of a consumer proposal. What happens if I miss a payment on my consumer proposal? Over the life of the consumer proposal, the debtor may miss up to 2 payments, and the trustee will simply add 2 more payments to the end of the proposal. However, if the debtor misses 3 payments, the proposal to creditors collapses and is annulled by the court. If the debtor proposal is annulled, the unsecured creditors may immediately apply to the court to garnish the debtor's wages, and interest charges are applied to the debts back to the day that the debtor filed the consumer proposal to the creditors. Why do we offer this information free of charge? At CCredit, we believe in educating our clients. We want to be your advisor to help you evaluate your options, to see if a consumer proposal is the right option for your situation. Structure your assets. Negotiate your trustee, the terms of your consumer proposal. Re-establish credit to you to have a better financial future. If you are worried that you can't apply the principle contained in this insight, or if you have a question or comment, please call us or email us. We want to see you go from debt to wealth, to have a prosperous life. Thank you for taking the time to listen to the Consumer Proposal module. Should you have any questions, comments, or feedback, we would love to hear from you. If you like these solutions that we can deliver to you or your family, please give us a call for a free complimentary assessment of your unique situation. We hope that you have benefited from this. If you did, we kindly ask you to pass it on to your friends and family. We look forward to hearing from you.